everyone is talking about election trading. But we're not here for the obvious plays. We're going to look at some unique opportunities that might be flying under the radar. Now, let's start with what we're seeing in markets right now. If you've been watching, you've probably noticed the VIX, the fear index, creeping higher as of late. And this isn't surprising, it's actually pretty typical for election season. Traders are rushing to buy their insurance policies in the derivatives market. CBOE, the company that facilitates the VIX index itself and most of the derivatives trading, their data is showing that the market is pricing in a potential 2% move in the S&P 500 up or down post-election. But there's something bigger under the surface that most traders are missing. It's something called the Vana effect. And it could be a big deal after the election. See, right now, the market is massively overhedged, and we're seeing elevated premiums for index puts versus calls. And for the first time since 2018, hedge funds and speculators are net long VIX futures. Now, everyone's playing defense, but here's the thing. When all these hedges unwind after the election, it creates what traders call a mechanical bid into year end. So think about it like this. Once the election uncertainty clears and volatility drops, market makers will need to buy back contracts to cover their short index futures positions. Now, we saw this exact pattern play out in the last election. Add in the fact that we're entering a historically strong season for stocks, companies are ramping up buybacks to about $6 billion per day in November. And you got a recipe for a potentially significant move. Speaking of obvious trades, everyone and their grandmother is piling into what they're calling the Trump trade. And that's going long the US dollar, short bonds, even going long crypto, Bitcoin in particular. But here's my take. This trade might be getting a bit too overcrowded. Remember what happened last election? We had a week-long delay in results, and all of these obvious trades got pretty messy. Now, if Trump wins, one thing we can be pretty confident about is new tariffs, especially in the apparel sector. Recently, Columbia Sportswear's CEO recently came out talking about how their industry already deals with up to 40% duties on some products. And the smart players in that space have been preparing for new tariffs under a Trump win. Colombia is actually pretty well positioned if tariffs should be imposed. They have invested in onshore manufacturing heavily and have stocked up in inventory in preparation of these tariffs. Out of their peers, one hasn't mentioned positioning or prep for potential tariff headwinds at all. In fact, unlike most of the competitors, Under Armour hasn't mentioned any plans. Looking at Under Armour, we can see demand for their products have been weakening. Revenue is down 10%, North American demand down 14%, and with this space needing to grow with e-commerce to keep up with peers, their e-commerce is down 25%. Their biggest product drag being in apparel and footwear. They're trying to distract with this new Protect This House rebranding campaign, which I don't even get what that means, but they might need to protect their bottom line first. We've got 13% short interest on this stock, and options are pricing in about a 55% move in the next few months. Now let's look at a second play. This one's for if Trump loses. Now I'm looking at Rumble, and Rumble is known to be staunchly a political platform, most notably conservative politics platform, mostly hosting people who were banned from YouTube, people too based to be part of the zeitgeist. They just hit record viewership during the Biden and Trump debate this past summer, and they're banking on election ad revenue to increase their revenue in the next report. But here's the catch. They're struggling to attract not only mainstream viewers, but also mainstream advertisers. And they're facing the same branding challenges as X has, with a group called GARM, which formed a cartel against these free speech platforms. At least that's what they brand themselves as. And they've gotten some potential catalysts on the horizon, particularly Rumble. Now, they had a recent deal with the Miami Dolphins, though the NFL numbers are down, so I don't see this as a potential that's really going to move the needle too much on this company. Now, they're also talking about a possible government contract with Macedonia, which isn't that impressive either. Now, the company is noting strong engagement metrics heading into this election. But here's the real kicker: their core audience is heavily Republican, right? So a Trump loss could seriously impact user engagement, especially since their top creators are almost exclusively focused on political content. And I don't know if morale or interest to keep watching political content amidst a Trump loss would really be that high. On the surface, revenue is growing, but further down you go into the financials, the worse it gets. And their earnings are already making its biggest drawdown ever. And the market is pricing in a 65% movement for the next few months. Now, a lot of people might be thinking, well, with the election, Trump versus Harris, I might want to play the energy sector since Harris is notably known for being anti fracking. But here's why I'm staying away from that trade. Harris has actually flipped on fracking. Now, as a California senator, she was anti fracking, of course, but now she apparently is pro natural gas production onshore. And the Biden admin just lifted permits this year for natural gas producers after a court order. So, US drilling activity is already at a pretty significant high. And the election isn't going to move the needle here like many might expect on that front. Now, remember, these aren't your typical election trades. They're based on a second order thinking, looking at the ripple effects rather than just the obvious plays that everyone's talking about. So while everyone is focused on direct election outcomes, I'm positioning myself to potentially benefit from the structural flows in the market in specific company situations that are independent of election outcomes. Now, whether you're bearish or bullish on either candidate, these setups give me ways to express my views without getting caught in overcrowded trades. And with the Vana effect potentially providing a tailwind after the election uncertainty clears, timing is really crucial on these trades.